presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. Hey, John, what's going on, brother?
Hey, Tom. Good afternoon to you. How are you?
I'm doing great, man.
I want to thank you, first of all, before I ask you about the stock. You and Tim Ward and all the gang at TFNN. I had a really, really good year after the October call you guys made. My 401k is up 72%.
Congratulations, man.
A couple of things I made with Coinbase and other stocks that I made, and I've had a good year.
And we appreciate you growling and prowling with us, man. That's a beautiful thing.
Now, Tom O'Brien.
Good Friday afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 3 p.m. Eastern Time. We got the final 53 minutes left to go in the day, and we are pushing right near highs right now with the S&Ps up by 1.5%. And yes, Chairman Powell, he indicates that the risks are in the job market, and they're ready to go. And the headlines, they speak for themselves. Wall Street gets the rally signal. There it is. Come on, sit up there. There it is. From Powell, it was hoping for. Well, hope, yeah, we all got hope, right? But yeah, we got it, man. They got exactly what they're looking for Friday, is as Bloomberg puts it, when the Fed chair unleashed the biggest cross-market surge since April, striking a dovish tone, and you look at the market reaction, rates spike lower, equities spike higher. You're seeing it in the Russell dramatically. But yes, getting into the exact. All right, I'll pull back some of the quotes. We'll get into some of what he said, but it was strong words. I found myself sitting there saying, man, I feel like this is a big one. Strong language from the chairman, locking himself in, kind of somewhat surprising. And if that's how he feels, they're making the choice, and markets are he knows they're going to start reacting right now, and he must want them to start reacting right now to make that strong of an indication. And they are reacting, with the NASDAQ up by 1.6, Dow up by 1.9, and the Russell up by almost 4% right now. We jump around to some of the high flyers. Amazon, 3%, just like that. NVIDIA up by 1.7%. Microsoft shares up by 0.6%. Google shares up by 3.4%. I believe that's an all-time high print on Google. Yes, it sure is. 209.23. We're at all-time highs on Google shares now. Google has a $10 billion deal with Meta. Okay, Meta inks a $10 billion deal with Google for their cloud infrastructure over 6 years. Meta up by 1.9%. Jump around Tesla shares. Tesla up by 6% to 340. You jump around to some of the high flyers. Robinhood up by 3% right now. Palantir up by 1.7%. Paramount Skydance spikes to 1664. That one's been on a little bit of a tear. Up by 0.1% right now. Jump over to Netflix, 0.3. All right, let's take a look at yields. So as I stated, we're not even at the lowest point we've been in the last 10 days. So yes, the chairman, he's bringing it. But the 10-year is not even as low as it's been on 1, 2, 3, and 4 occasions in the last few months. And once and twice it's been this month, right? It's not even at the lowest 2 points it's been at this month for yield. So we have a little bit of a ways to go. And there are cuts priced into this market right now, but 4.2 on the 10-year are going to be interesting to see where we go from there. You jump over the 2-year, okay? Same action on the 2-year, though. We're not as high on price as we've been August 14th, August 4th. Huge move on the 2-year. And when you jump into the yield curve, in terms of where the movement is, on a 10-year, we're down 8 basis points. But how about on a 2-year? Down 10 basis points on a 2-year. Mammoth move on a 2-year basis. Biggest move in the curve, the 2-year and the 3-year. And the 5-year. You jump over the home builders today. Yeah, how about it, right? Lennar up by 5.2% right now. D.R. Horton up by 5.2% right now. KBH up 7% right now. It's a big day, folks. The only risk here is inflation. Okay, now where this gets interesting is you better believe this is going to matter when it comes to mortgage rates, okay? The only risk is inflation on the other side. Now, there are already rate cuts baked in, okay? We've been going over it, right? You already got 2 to 3 cuts baked in. Before the chairman spoke, you already had 3 to 4 cuts baked in over the next 5 meetings. So the market already thought the Fed was going to cut 3 times by the time we get into March, okay? Chairman's in there until May. So the market was already thinking 3 cuts by the time we get into March, maybe a little bit more. But yeah, there's going to be some wind and pressure for yields to drop, and you better believe that's going to matter in housing, folks. And, you know, if you're thinking about getting into a home and you don't need and you don't want to wait for that acceleration, because if you have buyers, folks, if we start pushing 5% mortgages, okay, you're going to see an acceleration in the home prices. And the market has been doing relatively well for where rates have been. So it's almost like this has been the consolidation, okay? And don't look for the home builders when you look at the housing prices, because they're their own beast. You know, they were the only game in town when everybody was locked into mortgages. You've had a mortgage market where we've had home prices that have basically stagnated since the highs of 2021. I can show you many charts in terms of property prices that peaked out. Even in Florida, man, we had like 100% acceleration over a 2-year period. And then prices have held somewhat steady over the period of 2022, maybe 2023. We had a good run in October of last year, and things have come back where they're again looking pretty strong right now. And I think people are trying to get in ahead of this market right now, the same way that you would for Lennar. You know, the same people are trying to get into Lennar before you get the next acceleration, the same way people are trying to get into housing right now before they're competing with home buyers that are accessing mortgages at 5.5%. They're only competing with people getting mortgages at 6.7, 6.8 right now. Maybe you buy down some points. So yes, the next 6 months of the year, you might see an acceleration. There's going to be a supply release too when people can sell their homes. But there's a lot of people that got to buy a home, man. A lot of people that are stuck renting, they can't fathom it. They start seeing payments come down at an affordable price before rises rip higher. I'm a little biased now, being a little deeper in the real estate market, but it's a real deal because we're seeing it in the market, folks. The things are picking up, phones are picking up, and no matter what happens over the next few months, now that we have the writing on the wall from the chairman and the president's behind him, right, it's going to take a heck of a lot of inflation to have the Fed pause those cuts and have the president, who's going to have a lot of influence come May no matter what. So now we know we're going to get some Chairman Powell cuts, and no matter what happens, we're probably going to have a new Fed chair, and the influence is still going to be to the downside come May. And the market's paying attention, folks. Look at that Russell. Up by 3.9%. Dow up by almost 900 points. We'll come right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We have the S&P's up by 96 points right now. We jump around to some retail. So Walmart, kind of the flip side of what's been happening here. They've been a little bit of a safe haven. And on today, when you get the rally in tech stocks and you get it everywhere else, you actually get a pullback in Walmart off by 1.2%. Interesting to see the safe havens that have developed. Target, different story. They're not a safe haven. They're accelerating higher, up by 2.2% right now for Target shares. TJX, it's amazing, right? The stocks that have done so well that have been the bellwether, lower. Mickey D's, barely in the green. One of the best equities out there recently. Boeing shares participating, up by 2.6% right now for Boeing. We'll jump over to GE. Let's take a look at GE. We almost complete the one-to-one from that October 2023 rally. You pull back to the 382. And you get up to 281, 289 would have been the completion there. Yeah, look at how we had all that volume on their last earnings, July 14th, the week of. You trade up to a high of about 270. It looks like we're rolling over from that price point. I should come back down, maybe test the 255 area. The highs from the week of June 2nd, the highs from June 23rd on the candle. All right, and in light of the chairman's remarks, you got a lot of banks coming out and updating their forecast. Deutsche Bank shifts Fed rate cut forecast to September. They all do it, folks. I'll cut to the chase. Okay, they all do it. Amazing that some of them had none still. Now, they talk about Trump and Powell. Trump's making sure that if anything bad happens to the economy, that he can blame it on Powell, saying that he should have cut a year ago. He did cut a year ago. He cut 50 basis points. And then he cut 25 times more than that. They're 100 basis points already below where they were. So their plan was to cut, make sure they weren't cutting too low, remain restrictive, let things play out. And I think they've made a decision that they are pretty sure they're still restrictive. The jobs risk is a higher risk now. Yeah, BNP Paribas, that was the one, have revised their long-standing forecast of no Fed interest rate cuts this year and now see officials easing policy by a quarter point in September. And Barclays. Although the door for another hold is not closed, I would disagree. It was strong words, man. He didn't have to lock himself into that. So he made that choice purposefully to be as strong as he did. Didn't have to do that. Powell's remarks at Jackson Hole make us think a September cut is most likely. That's why Maria makes... No, who's... Mark Giannoni. Well, that's why they make the big bucks, because they're making quite a leap. No, I kid, but yes. Makes us think a September cut is most likely. We expect 2 cuts this year in September and December, followed by 2 cuts in March and June. Jumbo cuts very likely. Unlikely, excuse me. Important one there. Jumbo cuts very unlikely. Pretty reasonable take of where the market is right now and where the chairman spoke with his words. Jump over to crude. Crude 63.81, catching a small bid as well. Yeah, so some of the quotes he had in here, okay? The stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, the policy in restrictive territory, the baseline outlook, and the shifting balance of risks may warrant adjusting our policy stance. Pretty strong words from the chairman. And yeah, Bullard, former St. Louis Fed, saying that he used the speech to solidify expectations for a 25 basis point cut. He leaned into the most recent labor market report that got the BLS chiefs fired because of the revisions. And so I think that's a done deal. And I would agree. I think it's a done deal. The fact he's already made that decision without even looking at the August data that they'll get before the September meeting, strong, man. All right, jump over to Disney shares today, up by 2.3%. Take a look at Disney. You got football season coming up, of course, and, going on that ESPN app, which I pull up occasionally, just the ESPN regular app. It's amazing. They're bombarding you with, of course, the ESPN app for all of their content coming down the line as they try and make that leap to direct-to-consumer. Disney, quite a trading range. You break above this, man. Could really in for a run to the 180 area. Look how you've been building cars for 3.5 years on Disney. You touched that area in August of 22, almost made it there in the beginning of 23, made it there in 24, close to that area at the end of last year, the beginning of this year, and again in June. And the remarkable thing is, if you go back, that area has been an area of resistance for 10 years. That's where it first accelerated to in 2015 before you ripped lower. On an earnings miss, I think. Yeah, August. Look at that. Exactly 10 years ago. August of 2015, man. Imagine that, right? You could be in a losing position in Disney if you were buying it back in August of 2015. But hey, think about what the business was worth back then. Think about what the value of $1 is worth back right now, back then. Even if this thing just gets to the same exact value of what it was worth back then, and yes, you're making a leap, that would be a leap, okay? It doesn't mean that has to happen, but inflation adjusted, you have quite an appreciation to go. I mean, you compound something at 7-8%, and you don't have to get that high, but 10 years compounding. That's why they call it compounding, okay? 10 years. And for some context here, you have the Dow at 15,000 almost. We're at 45,000. You have the S&Ps at 2,000. We're at 6,500. The Russell doesn't go back that far. It's amazing I got Bitcoin futures that go back further than the Russell 2000 futures on my Thinkorswim platform. Yeah, look at Amazon rocking, baby. Up by 3.1%. Man, Google. All right, so NVIDIA up by 1.7. You jump over to Intel, up by 6.2%. The news out there, that they're going to go for a 10% stake in terms of giving over the government. They're demanding their stake, and Intel, very little choice but to hand over equity ownership to the U.S. government. And that's how it works. So the government asks for a piece of your company these days, and you don't have much of a choice. And you just give them a piece of your company, 10%. Here it is. That's the cost of doing business. And Intel, they reacted harshly originally to that news, and what'd you do? You get it all back on the market acceleration. All right, S&P's up by 96, NASDAQ up by 364. We're sailing into Friday. Nothing getting in the way of this market, folks, as you have a VIX right now, 1435. Come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Markets sitting right near highs. We're at 94 points in the green, 1.5% in the S&Ps, 1.5 in the NASDAQ, 1.9 in the Dow. and the Russell up by 3.8. You take a look at what's moving this market, basically everything except a few select, like I mentioned. Walmart, Coke, Verizon off 1.5%. Johnson & Johnson barely in the green. That's the Dow we're looking at. Take a look at the NASDAQ 100. Some big, strong numbers here with Tesla up by 6%, Amazon up by 3.1%. And yeah, some of the staples, Costco down by 1.3%. Intuit, yeah, with their numbers or something, up, down by... Yeah, they're out with their numbers. TurboTax down by 4.8%. But one of the few select negative areas in the NASDAQ 100. You jump over the Russell 2000. Look at this green everywhere. Look at the financials. Look at these financials, man. There's a whole sector that's bright green. Those smaller cap financials. I just, you don't look at these numbers. 4.4, 7.2%, 5%, 4%, everywhere. Industrials, 8%, 6%. I'm just going through numbers. ZWS, look at all these companies. We got 2,000 of them in here, up by 4.2%. INSM, Insmed, down by 0.6%. Duolingo, down by 4%. What's going on with Duolingo? All right. They're selling Duolingo. The stock particularly volatile. You run up on AI, you give it back on AI. They're going to be under constant pressure, man. AI is going to change the world and everything, but yeah. All right, we had a great question in the Tiger's Den, folks, talking about the SPY, talking about volume. And, here's what I'll say about this one, right? Because it's a great question. The question is, the volume looks about the same. We haven't broken the high, but shouldn't it be a lot more? I know not to fight the Fed, but price, volume, ... right? That's how it goes. So the volume looks about the same, and we haven't broken the high. True. Okay. I'll take it even one step further. Back to the weekly and the SPY. Okay. Look at the selling we got. Right? You're rising. We're going to have more volume than the prior week this week, though. And you have broken the high in the SPY. Doesn't compare to the selling you got the week of July 28th. All right? And we highlighted this week, this volume you had from late February to March. Big numbers. Right? Look at the volume you had in the selling. Where you started out at 600. You had a big sell-off. This was before Liberation Day on April 2nd, folks. Okay? You preceded that. We go back to a daily. This was the selling area back here. Now, when you go to the NASDAQ 100, you go to the futures, okay? You go to the S&P, you go to the futures. Look at this volume area of selling down here, okay? Look at this volume here of selling. But guess what? Does not mean that you can't just trickle higher on thinner volume. That's the toughest part about this one, double broad, And now the chairman... his risks are now erring on the side of the job market. I mean, he also had a quote in there that when the job market weakens, it can do so very quickly. There's something to that degree. Something that we all kind of know, right? Things can fall apart very quickly. They can be late to the party. And they're now shifting their concern. And I would agree with don't fight the Fed. Okay? Because, yes, the volume's going to win out. But what gets in the way of this market right now where we know, Trump says things like 200 basis points, folks. Right now, they're only pricing in the market still an 85% chance of one cut. And meanwhile, he's getting clobbered by the president because he's late to the party with basically a guaranteed cut, in my opinion, coming in September. Point is, pressure's going to be on, man. Okay? And if pressure's on to cut right now, this market is going to get a little bit of a reprieve, and you're going to have the wind at the back, man. And yes, there's a real threat that you're going to see tariff concerns come into the picture. And the real risk here, okay, is that now you're going to have a Fed erring on the side of the economy. And if the economy might not be as weak as they worry, they inflate the economy I mean, folks, you're going to be able to pull money out, and I encourage you to think about doing it. Okay, we get a real move lower here. The risk on the other side is that you have inflation, and eventually market forces will win out, folks. Okay? If we all got to choose, we would all want 0% interest rates, especially if we were the president and we had a vast empire of real estate. Okay? That's not how it works. There's a potential, at least, that as we come into this cutting and some of the costs that persist could weigh in. And that's what you want to keep your spikes up for on the other side of that. That the prices rising would force even Trump, who wants lower rates, and whoever he brings in as Fed chair, because the market forces will win out. Okay? And if that's the risk, hey, that's what the risk is. There's really no other risk. Let's bring them down. You know, I'm excited. I got some properties that are going to go up for sale. It's going to be a good thing in the short term, no matter what. The only real risk is the longer term. So in the short term, capitalizing on it. And on the short term, I think the market is really positioned well with Chairman Powell, because he kind of surprised me how strong he was today. And to make up that decision, that really means that he doesn't even care what the next month of data says for the prices, because the jobs is the worry right now. And heeding that, I said to myself, okay, there's no fear in this market right now for the next few months, because pressure is on, man. And you got 1 to 2 cuts this year, and you got 1 to 2 cuts next year. Easy. The data can change that. But even with it just saying 85% chance for 1 cut in September, you go out to December, and the market thinks there's a 50% chance we get 2 cuts by then, 37% chance you get 3. And you go out to March, 3 to 4 in the next 5 meetings, folks. 3 to 4 in the next 5 meetings. You go out to April and you go 6 meetings, you get 4 cuts. 3 to 5. 3 to 5 cuts over the next 6 meetings. So yeah, pressure's going to be on to the downside, man. And that at the back of the market right now, yeah, so I'd be careful. Even with price and volume lining up, we're walking into a very interesting area where the Fed is pivoting, the market's reacting, yields are dropping dramatically, the 2-year. And yeah, we'll talk a little bit of yield curve when we get back as well. Stay tuned, folks. Come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting, designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Market's giving up those gains a bit, but we're right where we were on that takeoff, man. Instantly. You got a full percentage point in the S&Ps. You had yields dropping dramatically, and we've just been chopping around since then. You know, Vic says it all. Right, 1427, man. So far below where even an average VIX would fall. 1445 right now. That's your weekly. Put it on a monthly just to see where we're chopping around. I mean, what did we have last year? Yeah, we got down to 11. We got down to a 12, and maybe that's where we're heading to right now because I don't know what gets ahead of this market whatsoever. All right, S&P's up by 89. Yeah, check out that NASDAQ 100 up by 328 right now. Dow up by 837. We jump over to Apple shares. Up by 1.2% right now. Jump over to Amazon. Up 3 percentage points. No matter where you jump around this market. Let's take a look at the dollar. So, as I mentioned, we're not really to the lowest yield we've seen in the 10-year right now. You have the 10-year at about 4.25%. We've reached 4.19. When we were at 4.19, that's when you had the dollar down to 96.37. Pressure's going to be on the downside. And on the wind on gold, yeah, you got the wind at the back of gold. And boy, you know, I'm thinking about it right now, believe me, because I think this is that would be a nice 4-month consolidation you're talking about on that gold contract. Let's see if we can catch some volume. That's your weekly. You go to the daily on gold. Yeah, you're moving higher with some big volume. Gold's up 1%. You jump over to silver right now, up by 2.2%. Check in some of the silver stocks. First Majestic up by 3.2%. Yeah, pushing $9. Hecla up by 2.6%. We check in on some of the gold equities. I mean, the XAU right now. Whew. It's an all-time high. That's an all-time high in the XAU. Finally breaking above the highs that we had. And I think you broke above it yesterday. Yeah, you sure did. Hey, the 1 to 1.618 expansion is 254. At this point, that's where it looks like it's heading, man. That's another $15 right now. HUI. The 1 to 1.618 gets you up to 524. Now, the HUI is not even at all-time highs. How about that one, right? Imagine holding the HUI since 2008 when gold's going from $1,000 to almost 3,400. Meanwhile, you're break even on the HUI. My dad used to say it, man. You own the metal. You don't own the miners. You trade the miners. You own the metal. That chart says it all, even on this acceleration, right? And you can see, you know, because you could have made the case, right? Well, if you get this another acceleration, I mean, think about it. In 2018, we're up almost 3 times where we were in 2018 on the metal. And yeah, you're up more than that on the miners, but not by that much. Okay, you were as low as 66. Yes, it's almost a quadruple from the low. No, forgive me. Where were we just going? Yeah, from 2018, October of 2018. Yeah. Exactly, $64. So almost a quadruple. But boy, that's not that magnificent of a return when you think with the metals. You're usually supposed to get much greater multiples. The miners have been underperforming. GM up 3.2. The car company, Stellantis, up by almost 5%. Ferrari, gaps all over this chart, up by 1% for Ferrari. Check in on Oracle Cloud Infrastructure, OCI, up by 1.1%. That's the dad's company. The kid's company is Paramount Skydance, flat today at $16. I joke, but not really. Part of the reason why I talked about that company originally before it blew up. I mean, you're telling me Larry Ellison would ever give his son $7 billion? I don't say give, okay, but I do say give. Without at least offering some operational expertise, somebody like that, in that type of an arena where you're talking about CBS, Paramount, to the likes. And yes, I'm sure his son is running it, but, you got an army of wealth behind that. And some good friends in the White House for the blood sport match on the White House lawn. Yeah, it used to be Paramount. No symbol anymore. Paramount Skydance. And yeah, that's your daily. How's that for a weekly? But guess what? Not going to keep up with the volume with last week. So shorter term, folks, okay, if you're trading this thing and you don't want to hold this thing for more than a few days or weeks, yeah, you better think about getting out. Now, with that said, okay, I'm holding it because I'm going to hold it for the long term. And everything is an arbitrary number when you get volatility that's meme-ish. And you look at this chart and where it's been. Look at that technical move, right? How about it? How about that for technicals? Chops around, chops around, chops around. They merge. You dip down and touch 995. And we made it to 1010 in 2020. Yeah, on the COVID pullback. All right, so next week, I appreciate you posting that in the den, Elo. Yeah, NVIDIA, the main event next week, Wednesday. Wednesday? Where are we? Yeah, Wednesday. After the bell, you get NVIDIA earnings. Some of the other ones, we get some big earnings. Snow, Crowd, Ulta, Marvel, Baba on Friday. Oh, whoops. I was like, what's going on with that chart? There we go. NVIDIA up by 1.7%. Quite a candle. Let's take a look at the volume. Yeah. I mean, here's where you'd want to see a little bit more. And listen, I'm telling you that, I think if the market could just fly up, doesn't matter on the thin volume when you got a Fed statement like that and a pivot. But we got a lot of volume 2 days ago. And on a day like today where you're getting the market reaction you're getting, and yeah, that was a huge bounce for NVIDIA that day. It really screamed strength. But we're going to miss the volume number by a big mark. This is an average days of volume on NVIDIA. Microsoft, same thing. Look at the volume today compared to where it's been. Amazon, paltry, nothing. Look at that on a day like today. AMD shares, nothing there. Oracle, very little volume today coming in the markets, as we're saying. Apple shares, look at the drop off. This is a daily volume. Phew. Nothing. Doesn't matter. Market doesn't need it right now. Because guess what? Doesn't matter how many buyers. Who's selling? That's a better question, right? There's no sellers right now. So it doesn't matter how many buyers are in this market. Because if nobody wants to sell, it can just drift higher. That's it. All right, folks. We got 10 minutes left to go in trading. S&P's up by 96. I'm coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So tell the world, Chairman Powell, he's ready to cut in September, folks, because that's my take. Listening to that speech, man, strong words across the world and just across the entire speech in terms of talking about the risks, the recognition. Man, I got to get that one. Yes. We got to change the tone. And he had no reason to do it unless he was confident. And we're talking about volume. There's your volume, folks, okay, in the 10-year, right? It's the most volume we've had since May. I don't know why the market's pricing in at 85%, because the chairman's mind is made. And, yeah, the dollar diving low to 97.74. And, yeah, you could have looked for a little bit of a bigger move in gold. You're up by 35 points, but that is a full point move in the dollar, which is just a mammoth move, 97.77. We jump over to natural gas, so, yeah. The doldrums, man, down by 4.4%. Lows of the year. Take a look at the weekly. Probably heading back to $2, right? Just a nice round number. We're breaking everything else. You're right in the middle of this range, and you can see how last year you bump around. You know, you trade from that $3 to that 2 area pretty quickly. Let's take a look at the Russell. index. Yeah, Russell, only about 100 points from where we were at all-time highs. And the Russell is now dramatically well off those April lows as well. All right, S&P's up by 91, folks. NASDAQ up by 338. Quite a Friday. Put it on your calendar. They're ready, folks. They're ready to cut, and the market's ready for them as well. Folks, thanks so much for tuning in. Have a great Friday. Have a safe weekend. Great weekend out there. Your family, your friends. Enjoy it. Thanks so much. We'll see you back in Monday, 9 o'clock for the morning market kickoff. Have a great one, everybody. Take care.